Hi, Happy New Year, everybody. Today is New Year's Day 2014. Hope everybody had a nice celebration last night, New Year's Eve, and enjoying their New Year's Day off and watching some of these bowl game. Right now, I got the market indexes on the screen here, and as you can see, that all the indexes, close out 2013 at a record level. All these, like especially, other than the Nasdaq 100, all the indexes is, at the record all-time high. The Nasdaq 100 is a long way from the all-time high, which is due to the dot-com era, is up at the 5,000 level. But for all intended purposes, it's at the multi-year high, so it is getting up there. And right now, the message that I'm getting from the market is that there will be a newer high to come. Will there be synchronization? What I mean by that is that all the other indexes continue to make new high, or just the Dow Jones Industrial 30. That we don't know. We just know that the Dow Jones 30 will see a newer high in the future. And how we're going to get to that newer high, we also don't know because it could experience a pullback before it go to a new high, or it just continue to march up. So right now, the market is kind of bullish, because if we also look at some of the breadth indicator, let's take a look at the New York Stock Exchange first, and you can see I have the spider on the S&P 500. I mean, not the spider, but the S&P 500, at record high territory, and you can see that the advanced decline line, actually came up, so it did make a new high. So it came back up and trended nicely with the direction of the index, but the new high, new low is still below the peak that was put in back in October of last year. Right now, it's even lower than the previous high, which is the 23rd on the December, from the last time that the S&P 500 made a new high. So at least there is, bought market participant on these new high. It is that the new high, new low, it probably is just indication of a lot of stock are doing a pullback. It is, pullback much more than, away from its previous high than most of the stock, near the recent high, and that's why when the market move up, a lot of stock is still a distance away from the previous 52-week high. And if we also take a look at the Nasdaq, similarly on the Nasdaq, you can see that the index made a new high here, and similarly the advanced decline line also come up and got to a new high. So that's a positive thing here. Again, similar to the New York Stock Exchange, it is below the previous peak and definitely below the high back in October and even the high back in July. So the new high, new low is still a little bit of a lagging, but the advanced decline is a good sign. It again indicate more, broader market participant on pushing up the new high there. So and if we take a look at say the diamond here, let's take a look at the daily first. So we see that the diamond, the ETF for the Dow Jones 30, right now is kind of peaking up at this 165, and we are expecting it to continue to trend on this channel here, and also even with the Fibonacci retracement. And if we take a look at this retracement here and getting up to this 141, we're still looking at this 166.36 somewhere up there. So that means we're looking at a Dow at least going to be a 16,600 plus. Right? So and if we take a look at the 60-minute chart here, and you can see that that 60-minute chart is trending up nicely, and it's also broken out here on this last trading session of the 2013. It's kind of peak up there and then kind of pull back a little bit. So we're probably still looking for this thing to continue to break, maybe a breakout above that and continue to trend up. And then also if we go back and pull up the daily and look at the spider, the S&P 500 ETF, you can also see that this thing could go up to this 127 extension, which is be somewhere around the 186 level here. And if we also take a look at the 60-minute on the SPY, you can see that basically be looking for this break, break out of that and maybe to a little bit higher level to that 160. That 186, I believe. Let's go back, take a look at that daily, the 186. And if we take a look at the Q, right, the NASDAQ 100 ETF, again, we're basically looking for this 89 level here based on this Fibonacci extension, the 127. And also we take a look at the 60-minute. Again, we essentially looking for this to break out for this level here, right? So right, this thing here, okay. And if we look at the Russell 2000, okay, the ETF IWM, here too we are also looking at a possibility of getting up to this 116, 117. The 141 extension is basically up at that 116 level, right? And the 161 is the 117 based on this FIB extension, this FIB retracement swing that I'm looking at here. And if we look at the 60-minute, essentially we're looking for this particular break here. All right. So if we could break out of this peak here, and we look for that run up to that 141 extension on this daily chart here, that 141, that 116, and possibly to that 117. Okay, so that's basically the quick look at the market and some of the ETF. And let's take a look at some of the stock that we've been talking about. Some of these momentum stock. Looking at Apple. Apple put in a nice little candle last Friday here, and it kind of filled this gap here. So if we take a look at the 60-minute chart here, you can see that there's a possibility of breaking out here, and then we could essentially look for this guy to come back to this level, this 575 on this top here, or this 575, 571. Okay, so essentially this right here, this 572. Okay, so right now we're essentially looking for this break here. Okay, all right. And if we go and take a look at the Netflix, okay, Netflix is also kind of interesting. Put in got a little doji here and a little bit of an inside bar, if you notice that, right? And if we kind of look at this here, right? So we take a look at it and looking for a break of that inside bar above that doji high. And if we go to the 60-minute chart here, essentially, let me put this up. So, and we're basically looking for a break above this guy somewhere around here. Right? Okay. And if we sort of, got a little trend line here, and we're basically looking for a break at this particular, formation, this type of price pattern. And then if we go back and take a look at Facebook, okay, Facebook is also kind of interesting. Basically put up a inside bar here. If we take a look at this, essentially, this is the engulfing candle here. So we're basically looking for a break above this high or this engulfing candle. And if we go and take a look at the 60-minute chart, so essentially we're looking at something like this here. Okay, breaking above this level here. Then if we go and take a look at the recent lot of talk about this stock is Twitter. Okay, you can see that Twitter, came down and put up this little doji candle here, and then it popped on last Friday. I mean, not Friday. Was that Tuesday? Uh, so yesterday, New Year's Eve, you can see that it popped up. And if we go and take a look at the 60-minute chart here, we are essentially looking at, it broke this trend line here, right, okay, and it came back up, right, came back up here, right, then it pulled back down. So if we go and let me take some of these out, right. So what we essentially are going to look at is basically for this thing to break above these level, right, then you could maybe have a little bit of a swing trade here because we're essentially looking for this type of price pattern here, right, breaking out this price pattern, right. So you have to be able to set up the your stop properly, because if we try to get it too close, then you might get stop out, and if you try to get it too far away, then your risk might be too big. So you have to determine what you're willing to risk and play this. Essentially right now, Twitter, it still kind of a little bit tricky to trade unless you are doing day trading. If you're trying to do some swing, then you basically have to be willing to accept some of the volatility. Don't recommend you buy option right now on Twitter because the implied volatility is too high. You're basically paying a lot of premium for that. So, and if they, it's just not a good play right now. That's my opinion. So, and if we take a look at, see, Google, and Google is also kind of interesting. It's near this new high territory here. And if you are thinking about getting in, then you basically want to play this breakout somewhere around here. Right. Okay, and maybe a possible stop somewhere down here or somewhere here. So you have to be willing to take these risks, because if you are trying to play this little short stop here, small stop here, then you most likely will get chop out, when it just do a little chop, shake and bake. So, and finally, let's take a look at Amazon. Okay. So here's Amazon again. Amazon got a little inside ball here after it made that peak about that 404 level here, 405. So you got this little inside ball, and if we take a look at the 60-minute, you can see that here's that top here, recent peak, and you could essentially play off with this, this break here, and the possible stop is maybe down here, right? So again, these you have to be able to take these risks. If you are doing a day trading, then you have to look at it in a little bit smaller time frame, shorter time frame. 60-minute is not the time frame you want to use to do day trading. So those are the few stocks that kind of keeping an eye on these momentum stock for the coming days. Who know, because there is, a lot of excitement, I guess. People are probably coming in to the new year and probably try to buy into this market here. I know there's a lot of people talking about, taking some capital gain as soon as the new year come around. But anything is possible. Everybody have their opinion. So good luck to you in 2014, and hopefully your 2014 will be a happy, healthy, and a prosperous one for you.